Today is January 17, 2025. It's time for a daily and weekly recap of the Ticks and Trades futures trading strategy and a little market analysis. I'm Sam. You're looking at the email that was sent out to subscribers this morning, almost 2 hours before the opening bell. You can pause and read through the game plan for the day if you'd like. And here is a screenshot of how the SPY looked prior to the opening bell around the same time. Notice the trend line at the top of the chart. It's after the closing bell now, about 6:36 p.m. You can see that when the market opened this morning, they gapped above all the levels and above this trend line. And once they got above, price was able to climb a little more. That's what we talked about in yesterday's recap video. This was resistance, and they got above the resistance. So if you were treating this as a process and using this trend line as a tradable level, what would you have done today? Was there a trade in here somewhere? So my thought going into the day was that if price got above this trend line and closed hourly candles above it, the bulls would probably be able to move price a little higher. But this whole area up and above and around this trend line would normally be overhead resistance. So I expected the initial gap above that trend line to be kind of a fake out and that price might fall a little before going higher. They do that sort of thing a lot. So if you were treating this as a process, yes, you would have gone short right after the 15-minute window because they were below this trend line. And that would have been kind of expected. I expected them to kind of get below, then force price below a little bit as a fake out and then go higher. Price was under that trend line. Your short trade, though, would have gotten out of the money pretty quickly, and a signal to reverse the trade would have happened at 5.5 points in the red. You would have been out of the money above this red line. That's the fumble threshold. And the reversal of that would have given you at least a base hit or more if you just let it go farther as they continued to go higher. So a loss, but mostly a wash if you played by the rules. So looking at the market at face value and recognizing that they were fighting to get above this trend line, that's bullish behavior. So being on the long side would have been the best position, especially when they bounced a couple times and kept going higher. It's easy to see that now after the fact. I'd kind of convinced myself that the time they were spending around that trend line was kind of a ruse and that the bears would probably come out and push price down a little eventually. The timing was right for a pullback, among other things. Basically, this whole area was supposed to be decent overhead resistance. And I'm telling you all this by way of explaining why I took the trade I did and why I stayed in it all day. We'll look at the recording of the live trade soon, but here's what I did in a nutshell. I went short a little early, pretty much playing by the rules. I had a fumble threshold above on my E-mini chart for reference, but I pretty much ignored it. I kept waiting for the bears to come out and defend this area and push price down, so I stayed in the short position all morning. So I was out of the money a lot. I'm not saying it was a smart thing to do. I just couldn't imagine that the bears were going to just let the bulls kind of waltz on through that resistance area, especially after letting them gap up higher each day for the last several days. So I persevered and I was out of the money for a while. When price did start to fall around midday or so, I added to the position. That increased my average entry price, which made my break even a little bit closer. I was able to squeeze a few points out right before the end of the day, right before the futures closed. So this recording is sped up a lot because it really lasts all day long. So you see me go short here right before that 15-minute window, so a little early to the game, and looking to take a handful of points off before they got down to this next level if they went that far. Of course, that never happened. So there's my fumble threshold. I got above it, pretty much was not applicable for what I was doing. I was just kind of ignoring it, but I'll scrub ahead here and show that they stayed above this trend line. I was out of the money the entire time. Eventually, I added 2 more contracts, so then I was short 4, and you'll see me adjust my profit objective up a little bit with the 4-contract position. Where was that? On the way down somewhere. Here we go. So now I'm short 4 and still out of the money. When I got back into the money, I adjusted the profit objective a few more times and pretty much just got out at break even, just a little bit of money. I'll just let this go because it's only a few more seconds here since it sped up so much right there. Okay, so that's it. I'm just going to stop this because it'll repeat if I let it go. So that was pretty much my trade, $475 before commissions. Not too impressive considering that I really should have been on the long side. Considering how long this whole thing took, I wish I would have just followed my own rules and took that 5.5 point loss early on, reversed, washed out most or all of that fumble. It would have taken a lot less time, but it was what it was. So what is the SPY doing, or where is it likely going? So here's the daily chart. The trend line here using Trading View is slightly different than the same trend line over on the chart at TradeStation, which is where I execute my trades. But running the same analysis on both platforms, you can see that the daily close was right above that trend line. The weekly looks like it's slightly below. It's kind of interesting. But in any case, they fought hard to keep price above that area at the close of the day and the week, really. We have a presidential inauguration and a national holiday, Martin Luther King Day on Monday, so the markets will be closed. Those events, along with where price and time are now in the SPY, should be interesting next week. If the bulls can keep price elevated, and by Tuesday morning get price gapped above this resistance area, that's probably a good sign for the bulls, and they can try again for the all-time highs. But there are plenty of reasons that a pullback and a retracement can happen soon too. So that's why I say next week should be interesting. It's all about price and time. I'm looking forward to seeing what the Globex traders do before the regular session opens on Tuesday, because that information should be helpful. Right now, all I can say is I see no obvious signals of an impending trend change. It's just typical resistance areas that the bulls need to fight. If they can hold on long enough to get past the time component, then they'll probably stay strong. If anything slips, though, the bears will be able to take control quickly. That's my 2 cents. I just enjoy being an observer. The big picture has little to do with the relatively small scalp trades we take using this trading approach with the futures, so the micro level is really where the precision is. It's fun to speculate about the big picture, though. Here are the tracking logs, the PBR, playing by the rules log. So this is the level, really the trend line that was hit when I input data over here in the input, the notes and everything. It only takes numbers for my level, so it didn't translate over here in this pivot table where the output is. So that's the trend line here. We'll call it level 5. And you know it was 5.5 points fumble, 4 points on the reversal. There's where you would have landed. And then over here on the Sam's trades, my personal trades, same trend line, same area. It was really a net 2.38 points on 4 contracts, $475 before commissions. So not spectacular considering I was in the hole quite a bit during that entire ride. But that's what I have for today. Thanks for watching. I hope you learned something, found this interesting. Consider subscribing if you have not already. I've been stuck at 269 subscribers for quite a long time. I'm not sure why it won't go above that. Thanks for the support. Anyway, I enjoy making these videos and looking forward to getting this course out so you can learn what I'm doing and the complete behind the scenes of all this. Have a good weekend. The market will be closed on Monday. See you Tuesday morning with new levels and a new game plan. And I'll talk to you in the next recap video.